Okay, so morning everybody, and welcome to a webinar on research and development tax credits. Um, Objectives today are basically to try and educate you on what we call the innovation incentive highway. So we really want to provide a nice thorough definition of what is R&D tax credits. We'll also touch a little bit on knowledge development box as well. We want to give you some kind of real life examples, also talking through how some of the grant funding that Emma just mentioned also impacts R&D tax credits and how the two work in tandem. Finally, towards the end, we just want to give you a bit of an update on some of the recent trends, new statistics that have come out in the last year, as well as government's R&D compass, which gives a little bit more of an overview as to what we're expecting to see in the coming years. Okay, so first and foremost, who are we? We're R&D Tax Solutions. We're based out of Merrion Square in central Dublin. We are a specialist R&D tax credit advisory business. Personally, I've worked within tax within 15 years, initially trained within KPMG and worked at Ernst & Young before working for my own business over the last 6 years. So operating both in the UK and in Ireland as well, but predominantly within Ireland. I know what you're thinking. You don't sound very Irish. Don't worry, I'm not English. I am a poor Welshman, so please empathise with me after Friday's defeat. Okay, bit of an overview as to R&D tax credit. So it's actually been around for over 20 years now. The credit was first introduced back in 2004, and it was initially based on incremental spending. That changed over time when refundable credits were introduced, and those have gradually increased over the last few years as well. It has been expanded and it has been simplified over time. Actually, when you compare the Irish scheme to the European market, it is highly competitive. Personally, I think it is the most competitive in Europe. And it is very attractive for small to medium-sized enterprises who are developing new technologies, new process, new products. Are there any big changes on the horizon? The answer to that is yes. Recently, government increased the credit to 35% from the 1st of January of this year. Tranche 1 payments have also increased to 87,500. But with that, there is greater revenue scrutiny and inquiry, and we will touch upon some of these changes towards the end of the webinar. Okay, before I kick things off in full and start delving into the detail, it'd be quite useful to get a bit of a poll from you guys. And what I'd like to know is if you currently claim and currently how comfortable you feel in making that R&D claim. So just launch the poll there. I'd be grateful. Spend a minute just answering that one for me, please. Okay. Share the result there. So quite interesting there. Majority of people have not claimed before. Their businesses haven't made a claim. There are a few that have claimed previously, and only 2 of those are contented with record keeping requirements and what to claim. Majority of people look to be intending on claiming in the future, and a few not sure if they qualify or not. So I will try and make this quite detailed so that people can understand their eligibility. And what I'll also do is try and make the webinar as useful as possible for those who are intending on claiming in the future, so they can make sure that they're preparing accordingly. Okay, R&D tax credits, what qualifies? So R&D takes place when a project seeks to achieve an advance in science or technology through the resolution of scientific or technological uncertainty. And that's based on both the OECD Frascati manual and also the R&D tax and duty manual. What does that mean? So overall, it means extending the overall knowledge or capability. That's within a field of science or technology, so within a particular sector, rather than the business's own innovation or commercial innovation. So that the types of things that we are thinking about there are relevant sectors. So that could be fintech, it could be engineering, structural engineering specifically. It could be within a field of manufacturing. You could be developing a new creation. So usually what I look at is a new product, process, or new technical knowledge. And that can apply equally to successful or unsuccessful projects. So for process, you could be developing a new process for manufacturing tethered bottle caps. Obviously, new regulations coming in there in the last few years. You could be creating something completely out there, like a new small modular reactor for nuclear engineering. It could be a fair bit simpler than that. You could be coming up with a new piece of novel proprietary software that provides additional functionality. Appreciable improvement. So that's taking an existing product or process and making it better than what's currently out there on the market. So you could be making something lighter, faster, stronger, more durable. You could be adding additional functionality that doesn't currently exist. And finally, duplicating the effect of something in a new or appreciably improved way. So we understand that often there are technologies in the market that are that company's own intellectual property. Those are usually kept as trade secret, and it's impossible to know how those have been developed. The information is not open source. So developing and replicating that in your own way and finding out how to do that through your own iterative development can also still qualify. Qualifying expenditure. So the big one is usually your staff costs. So that is your employees and directors' salaries paid through PAYE. We can include gross salaries, employer PRSI, employer pension contributions, bonuses. Pension contributions can be made directly by the business. They can also be made via the future fund. You cannot include dividend income, however, when you're looking at remuneration of staff. Subcontractors. Now, this is often an area that people get a little bit confused on and can cause some difficulty. So we are able to claim for subcontracted work. So that's services or tasks that are being undertaken by a third party, usually done through invoicing. But what we need to ensure here is that the company who is doing the subcontracting, so that the primary contractor in that relationship is the one that holds the IP. So they are getting them to do a specific task. It is limited, so it is the lower of internal expenditure on R&D or 100,000 euros. So what we do need to be careful of when we're structuring here is how much of our R&D are we subcontracting to third parties, especially when we're looking at overseas, versus how much are we spending on it internally. So say, for example, you have internal spend, one employee and software licenses of 50,000, but you are spending 500,000 externally on a third party to help you develop a new proprietary ERP system. We would be limited in what we're able to claim for the subcontractor. And that limitation would be the internal spend rather than the 100,000, as it's lower. And so in that example, we'd be limited to only 50,000 of third-party expenditure, meaning a total qualifying expenditure of 100,000. So that one's really important when it comes to planning, and for you guys who are thinking about making a claim, really important to think about the return on investment when you're looking at externally contracting. Individual contractors, they sit slightly differently to subcontractors. So what we have here is individuals who are subject to the supervision and direction of the business. Ordinarily, they are in the business for fewer than 6 months of a year. And they can be included without restriction if they fall within that criteria. If they go over the 6 months, they fall into the subcontractor category. Consumables, so if we're looking at prototyping, anything that is effectively wasted and consumed as part and parcel of the R&D process can be included. Generally, we can't include rental costs within that unless it's for a specialist activity. So actually rent for a specialist laboratory, that can be included within your claim. Finally, software. So licensing costs, hosting costs, any kind of specific development licenses that you might be using for your tracking Jira, GitHub, GitLab. If you are developing a new product, potentially looking at your CAD licenses for some of that iterative development, and your cloud hosting licenses as well can all be incorporated within the claim. So I thought it'd be quite useful to show you a comparative example for a tax relief calculation for 2025. And what this example does is show how the tranche payments that are currently in place affect the acceleration of you receiving your cash credit. So in example one here, we've got total qualifying expenditure of £250,000. The benefits at 30% for 2025, 75,000. Because that reaches the tranche one limit, actually all of that is payable in a single go. So tranche one is limited to 50% of the total benefit or 75,000, whichever is the higher of those two. Comparably, we've got a company here in example two who have actually spent twice as much. So whilst they get 150,000 in cash credits over 3 years, they are limited to only getting half of that in tranche one, and the remainder is payable in years 2 and 3 on completion of their CT1. So for tranche 2, you get 3/5 of the remaining benefit, and for tranche 3, which is in year 3, you get 2/5 of the remaining benefit. What it does mean for those companies that are doing multiple claims year on year is that by the time they're in their 3rd year of R&D claims, they are getting initial tranche 1, tranche 2, and tranche 3 all in one go. So that's when they start to see significant influx of cash back into the business as a result of the R&D tax credit scheme. So I thought it'd be quite useful, especially for those who are currently planning their R&D activity, and particularly for those who work in a kind of a testing scientific laboratory space, to have a quick run through R&D and capital expenditure. This is an area that isn't particularly well looked at, in my personal opinion. And so I thought it would be good to highlight because it is incredibly beneficial, especially when you tie it in with capital allowances at the same time. So what we can look at is two forms of capital expenditure. The first, which I'll run through, is construction and refurbishment. So if you are refurbishing or constructing a building or structure for the purposes of R&D, you can potentially claim tax credits on that expenditure. It's got to satisfy the 35% test. So R&D activities must represent at least 35% of all activities carried out in the building or structure, and that needs to be over a 4-year period. It also applies specifically to the proportion of the building that is used for R&D. You can't claim for the costs of the existing building or land. It is purely the construction of or refurbishment. Again, as I mentioned, we're looking at an apportionment. So if it's used for both R&D and non-R&D, we're looking for a just and reasonable basis based on good record keeping. You can time it for when expenditure is paid or when the building is actually brought into use. So it works a little bit similarly to some of your pre-trade rules. And a really solid example here, and I do have clients that have done this, is where you're constructing or more often than not refurbishing or repurposing a building for use of a laboratory. In this example I've given here, I've got construction of a new lab, costs €1 million, million euros. 40% of the building is used purely for R&D purposes over the next 4 years. We then have to restrict that. So that million is times by 40%. That gives us 400,000 of qualifying costs. The tax credit at 30% on that equals 120,000 euros. And that's payable back to the business as either cash or offset against their corporation tax bill. So plant and machinery, again, this might be a little bit more applicable for some, especially those that are utilizing specialist lab equipment or perhaps specific testing machinery. Again, this can also qualify for capital allowances as well, and we're looking at purely the proportion of R&D activities. similarly to purchase of land or the refurbishment or construction of buildings. The timing is when it's either first brought into use or when you actually pay for it. I guess a good example on here would be something like a microscope used purely for R&D activity. That can be used 100% of R&D activity, so it would qualify in full. If we're looking at a machine that is perhaps used partially for R&D activity, partially for routine activity, so say we have some testing machinery that's brought into use, again, we have to look at an apportionment accordingly. In this example, purchase for €100,000, 25 hours per week R&D, 30 for standard production. We then have a proportion of 45.5%. That 45,500 of eligible expenditure is then at the tax credit of 30%. So we're looking at just over 13,500 back on the purchase of that machinery for R&D purposes. Now, something that's probably going to be relevant for a lot of you, particularly for those who are looking at pre-seed start fund, then moving on to the high potential startup fund within Enterprise Ireland, and hopefully in collaboration with further. I thought it'd be quite useful to give you a bit of an overview as to how R&D interacts with grant funding, as often this can be slightly convoluted and often conflated by accountants. So I'll give you a real life example here for one of our clients. So this is a client who we started speaking to who initially thought they were ineligible for R&D tax credits because they had received Agile grant funding. So this client were building a cloud-based automation platform for fire and security. So this was moving away from legacy desktop solutions, creating automated mobile forms, had to be SEPA compliant for automation. They developed their own proprietary API and cloud interface so they could interact directly for Sage 50 accounts. It was all real-time data exchange out in the field. As I mentioned, they'd successfully applied for an Agile grant, which they were receiving in tranches over a few years, and they thought that excluded them from R&D tax credit eligibility. Our intervention here was to collaborate with the developers. We then had to identify relevant expenditure and then apportion accordingly between expenditure related to grant funding and expenditure related to all R&D activities. And the financial outcome on this was quite beneficial for the business, especially as they thought that they weren't going to qualify. So they'd actually received the Agile grant in two tranches, and the lower was payable in the year in question. And they had over 300,000 of qualifying expenditure, but they'd only actually received grant funding of just under 35,000. The way in which the R&D claim interacts with grant funding is that the grant funded amount is effectively deducted from your qualifying expenditure. So you're not getting double benefit effectively. That then reduces your net qualifying expenditure, and that's the amount that is then looked at for the tax credit. And in this instance, it gave them €80,000 that they weren't expecting and they didn't think that they were eligible for. What I should probably mention here, because this is going to be very relevant to you guys, is the fact that Pre-Seed Start Fund isn't grant funding, and sometimes this can be slightly forgotten about when we're looking at R&D claims. So because the PSSF is a convertible loan note, it doesn't actually restrict you at all from getting R&D tax credit. So it doesn't work like a normal grant. HSPU is grant funding, and that does work like the example that I provided here. But for those of you who are currently going through that pre-seed startup fund application, please don't think that you're unable to claim R&D tax credits, because actually you are in full. And there is a little bit of irony here in the fact that actually, if you have successfully claimed grant funding through Enterprise Ireland, revenue automatically in most cases tick the box for the science test being completed. So actually they say, well, because you've received that grant funding, your R&D definitely meets the science test, so that you are able to claim. That's automatic for small claims under €50,000, but actually it does add quite a lot of kudos to your claim if you are submitting a larger claim. Um, I thought it would also be useful, and especially given over half of the attendees have never gone through the process before, to give you a bit of a flavour as to what our process is. Now, accountancy firms, tax advisors, all of them have their own process and ways of doing things. I thought it would be useful for you to see what our process looks like, so at least you have a marker going forward when you go through that R&D tax credit process. So what we try and do is reduce the amount of time that you need to invest on putting together an R&D claim. Similar to grant applications, they can be a little bit daunting at the outset, and there is a distinct lack of framework in which revenue like to receive information. So we always try and go above and beyond in what we do. Um, we prepare all documentation. So we liaise with your competent professionals, your experts. We put together the technical reports for them to review, so that we're trying to maximize your benefits whilst also reducing time. A lot of that is done through reviewing through reports that you have. So any sprint documentation that you might have, any epics, if you're doing development in that way, we would review through. And then conversationally is how we then start to build up the claim so that we're able to articulate it to an objective caseworker within revenue. We help with the submission of your claim through your trusted accountant. So we like to work harmoniously with accountants. Whilst we can take on claims and do the submission ourselves, oftentimes it is better to have the submission done as part of your original CT1 filing and to incorporate the numbers within that original filing just to make it nice and clean. And to also know the benefit that you're going to be getting in advance. One thing that we also provide and we feel is really important, especially with greater scrutiny, is full inquiry support and defence. And we do that for the full 4-year revenue audit period. So we liaise with revenue should they have any queries. If you have a compliance 1 check, compliance 2 check, we would liaise with revenue in order to successfully close down that audit. How we maximise your claim. We walk you through the process, we review your current internal processes and help you instill those within your business from the outset. We help assess your risk, so we will look at your claim, understand whether you've got a bona fide claim to be made, and what the potential risks are if there are any borderline areas within that, ensuring that your record keeping is on track to ensure that revenue are happy with the requirements. We also have a look at wider opportunities. So sometimes there are areas within a business that you don't ordinarily think are R&D eligible until you start delving into some more detailed examples. And so we'll help to do that. And finally, value. So we look across your claim and we proactively help in terms of planning. Going back to that earlier slide on expenditure, we would look at what your plans are for the future in terms of, am I hiring a new employee? Am I going to utilize a third-party subcontractor? And we'll then build in what the return on investment looks like over time in doing that, both for the business value proposition and also in terms of cash value back into the company. So our standard process that we go through is, initially we'd go through a discovery phase of assessment. So we understand whether there is a bona fide and legitimate claim to be made. Personally, we have these conversations without incurring any fees. We'd like to expand our network, and that's the way in which we work. Once we've ascertained you have a bona fide claim to be made, we'll start gathering information. So usually that's we start off with looking at the financials, either getting access to your Sage, Xero, QuickBooks, or liaising with your accountants or internal finance person. And then we start gathering the technical. So we start to have case study discussions with those who are at the coalface, so to speak, those competent professionals who are at the forefront of development to ascertain the pure detail of the work that has been undertaken during each relevant accounting period. Off the back of that, once we've had analysed financials and we understand where the R&D sits, we then look to apply that cost to the qualifying R&D. So we go through a cost assessment where we effectively ascertain how long has somebody spent on each project, and which relevant contractors have worked on each project, what licenses are applicable across all of the projects, what should the proportions be, and we help you work through that to understand exactly what is qualifying per revenue guidance. Finally, once we've gone through all of that, what we like to do is provide the audit in advance. So off the back of our experience of going through audits with revenue, we do understand exactly what they like to see, and we produce a very detailed numbers report which gives detail of each qualifying project and the cost allocated to each. We also follow that with a narrative report that's written in a way that is easy enough for an objective person to understand why it meets the legislation, why it hits the tax duty manual guidance, but also simple enough for somebody who is objective to be able to follow and understand why that hits the R&D criteria, as well as providing enough detail to satisfy themselves that yes, this is innovative, this is complicated within that sector. Before I go into some of the recent stats and trends that come out, I did think it would be quite useful to touch on knowledge development box. It is often a forgotten innovation incentive, but it is one that over time can add value to your business. So just for your awareness, qualifying assets for knowledge development box are usually patented products, so that's new inventions, but actually within Ireland that can also include proprietary computer programs. In terms of qualification, what we look at is the revenue stream, so the earned income that is coming from that specific product, and we do have to separate those from the rest of the business. Application is made through your CT1. So as I mentioned, we look at the revenue stream that's effectively been ring-fenced for the purposes of calculating your corporation tax. And we take that revenue stream in isolation, and that is then subject to the knowledge development box rate of tax. Now, this used to be very beneficial, and it was 50% of the corporation tax rate. However, recently that has dropped to only 10%, so it's not quite as beneficial as it once was when you're comparing a 12.5% rate of corporation tax. We assist in this by, firstly, we have a patent attorney who helps make patent applications. We also advise on whether a software program can qualify for KDB, and we then make a valid application should we believe that you qualify, and help determine the revenue stream that's resulting from the patented technology. This is currently being looked at by government to see how effective it is comparably to other countries within Europe, and I do expect a little bit of change on this going forward. Okay, so before I do delve into some statistics there, I would just like to, I appreciate that's quite a lot of information in a short space of time. Obviously, if you have questions, we'll save those towards the end. But what I'd quite like to do before I show you some of the stats is just to kind of get a bit of a feel for your thought process on how many companies you think are currently claiming research and development tax credits within Ireland. And what I'll do is I'll then run through with you the most recent stats which result from 2023, and we can have a look at the differentiation between the two. So just launched another poll there that I'd be grateful if you could answer, please. Okay, share the result there. So majority of people think it's over 1,000, but less than 5,000. Got a fair few in there that think it's over the 5,000 mark, heading up into the over 20,000s, but majority around that middle section. And so here are the stats from 2023, and this is split between sector and also the number of claimants and what that looks like in terms of millions of euros. Total claims was actually 1,804 back in 2023. So you guys were bang on the money in terms of your estimates there. What is really interesting, though, is that the total benefit that was claimed was 1.9 billion euros. So you can really see how heavily skewed this is towards those larger companies, particularly big tech, big pharma, that have large presence within Ireland, because you're talking a significant amount of claim that is being made for each of those businesses. Unsurprisingly, large amount of manufacturing, large amount of information and communication that quite a few firms were claiming. I should probably note that there are, to my knowledge, over 400,000 SMEs registered within Ireland. So proportionally, very few companies are claiming research and development tax credits. Over the last year, I've personally attended tech summits, done a lot of work with accelerator programs, Pathway to Innovate, Learnovation, those types of programs. And I've spoken to dozens of tech founders and business leaders. Similarly to today, I'd say over 50% have never claimed before, but actually over 50% hadn't even heard of R&D tax credits, which was really interesting. What were the common barriers to claiming? I think first and foremost, the big one is unaware of whether they could claim or not. There's that lack of education that is out there at the moment. Believing only scientific research counted or only large firms could qualify. There are quite a lot of concerns around what does and doesn't qualify, and that's where having a tax advisor with expertise within this sector is really useful, just to give you that guidance. There's also quite a bit of concern as to around audit readiness, how revenue currently review R&D claims and what that process looks like. And there's a lot, especially within software, where there is a lack of framework as to what that guidance should be in terms of qualification. Surprisingly, some thought there was some quite low perceived value, which is contrary to the reality of things here, with a 35% return on investment from 2026 onwards. And then sometimes things get deprioritized. There is obviously, as a startup business, a huge amount of other things going on where actually this can be quite a time suck. And obviously going through some grant applications, there is a knowledge that actually they are quite time consuming. However, the way that we try and approach things is to take away a lot of that work for our clients so that the process is smooth and simplified. And finally, the grant confusion that I mentioned earlier. So where's the opportunity? There is a major education gap. What I'm here to do today is to, and hopefully hence our webinar, is to help you work through that and understand what the R&D scheme entails. And I'm always available for further conversation if you want to understand whether you do qualify or not. So recently, government have released their R&D tax credit innovation compass, and this really only came out in the last couple of months. It follows on from the budget in that it is providing greater guidance on the R&D tax credit and what we can expect in the future. So this has been Simon Harris's baby for the last few months, and was just released there in February. The compass itself provided a bit of an overview as to how Ireland is really doubling down and strengthening the innovation incentives landscape and actually improving the operation of the R&D tax credit scheme. So I'm just going to run through with you a couple of the core areas within this that were highlighted again. Now, these were already mentioned within the budget, but this is kind of doubling down on that commitment to these. One of the big ones is subcontracting rules. So I mentioned earlier that cap of 100,000 or franked against internal spend. They're looking at the potential expansion of that. It should be mentioned actually that there is a separate subcontracted limit that applies to higher institutions and universities. That is restricted to higher institutions and research institutions that sit within the European Economic Area, whereas it's not quite the same for third-party private business that's subcontracted to. Scope of qualifying expenditure is being looked at to make sure that it's up to date and modern. Candidly, a lot of the information that you get within the tax duty manual is quite dated. As I mentioned at the outset, a lot of that was put into place in 2004. There have been some updates, but I don't even think that, well, I say I don't, I know that artificial intelligence isn't even particularly mentioned. So there is a need for an update of legislation. Looking at the treatment of capital investments with capital allowances, expanding what I talked through earlier. Better alignment with OECD rules. So most European countries follow the OECD Frascati manual, and so governments have committed to a better framework that aligns with those rules. Accelerated repayment is being looked at. So we have seen increases to the tranches. It is that first tranche that we saw in the example of 75,000 is now up to 87,500 in the first year, but there have been questions raised as to whether the tranche system needs to be removed. And again, simplification of rules. There is quite convoluted interaction between corporation tax, the tax credit, tranche payments, your preliminary corporation taxes that are payable, and creating better openness and transparency, as well as that knowledge development box review I mentioned earlier. So clearly there is a doubling down on the commitment to the R&D tax credits and to the wider innovation incentives highway, but there is a need for a clear framework within this. And this is where tax advisors do step in and provide some of that clarity from learned experience that might be missing from a legislative or guidance perspective, especially when you're looking at and reading through the tax duty manual. So we currently have a lack of practical guidance, so very few worked case study examples. What we'd like to see is a greater framework where those real life examples are put into place that will allow revenue caseworkers to be able to ascertain exactly what is qualifying and what isn't. Science tests can be somewhat uncertain sometimes, and I will mention how that is looked at with revenue shortly. Again, I mentioned that there was a bit of an inconsistent interpretation. Decentralization doesn't particularly help in this instance because you do have different areas within Ireland that have different caseworkers who have different interpretations. And so what we're hoping, it is also a really important tool for those who have had issues with their R&D claim. They can request that Revenue appoint an independent expert to review the R&D claim itself and to ascertain whether they believe it qualifies for R&D. That person has to be agreed upon by the claimant. So you get to review the CV of the individual prior to their appointment. They do need to have the same level of expertise, competence, qualifications, experience of the competent professional within your own business. So you are genuinely looking at somebody who is objective and are a deemed competent professional within their field. So there's still greater opportunity within the R&D tax credit landscape to provide greater operational guidance. And with that comes better certainty for those of you who aren't claiming yet, consistent administration, and therefore stronger engagement. And given government's commitment to this, we do see this coming into place in the next couple of years because government have really doubled down on making Ireland an innovation hub within Europe. Key takeaways from this, and what I'll leave you with today before answering some questions, is that yes, the R&D scheme is complex and it is still evolving, but a clearer framework is in the pipeline. I would always use an experienced tax advisor, somebody who's gone through the rigmarole with revenue in terms of audit, utilization of independent experts, understands that process. They will be able to help you with the record keeping requirements and also dealing with revenue compliance checks. I'd also ensure that any tax advisor that you do use includes inquiry assurance within their scope of work, because those compliance checks are the bits that can add some uncertainty to businesses. And really, if you've got a competent tax advisor who feels confident within their work, they should know that you have a bona fide claim or not, and should be confident in the work that they're submitting.